When we talk about the trend continuation strategy, we are talking about the most simplest strategies you'll ever find out there. And let's look at the criteria quite quick. Criteria number one is we need a trend day. It will never be a trend continuation strategy if we don't have a trend day. What is a trend day? Well, a trend day is something like this. For instance, let's say this could be any day, right? We don't care about the days. Let's say this day they did something like this. These are price movements. One thing we will have here is we're gonna have the high over here and we're gonna have the low over here. So is this a trend day? No, it's not a trend day. So let's say the following day, if they do something like this and they come and close here, again we're gonna have the high over here and we're gonna have the low over here. Is this a trend day? No, it's not a trend day. And now let's say on this other day they do something like this and they come and close over here. Of course, again we're gonna have the high here and the low here. When we look at this, do we have a trend day? Yes. Why? Because it violated what? The high of the previous day. This day trended and it violated what? The high of the previous day. Had it violated the low, would it be a trend day? Yes, it will be a trend day to the downside, right? This is a trend day. I hope it's clear for everyone. Let's say, for instance, if the following day they do something like this, is this a trend day? No. Why? Because the high is intact and the low is intact. However, let's say the following day then they decide to do something like this. You see, from this previous day over here, we will have the high and we will have the low. This is the highest price reached on the day and the lowest price reached on the day. So this is not a trend day. Why? Because this high over here is intact. This low over here is intact. Is this a trend day? Yes. Why? Simply because they actually violated this low. So this is a T. This is a TD to the upside because this high was violated and they trended. And usually I will say I prefer two 1 hour candles closing above the high, because sometimes they can just come and pin it and you might mark it as a trend day, whereas it just pinned through. It never went and closed above. So make sure we have two hours candle closing above. All right, I mean 2 1 hour candles closing above, and this one now is a trend day to the downside. I hope we all understand what a trend day is. Now I believe we all understand what a trend day is. A trend day must violate the high or the low of the previous day, and we need to have 2 1 hour candles closing in breakout. Doesn't matter if it's above or it's below. Now criteria number 2, we need a pullback to key areas. We need a pullback to key areas. What are key areas? Let me explain. Now when we talk about a pullback to key areas, first off, we said criteria number 1 is we need a trend day, right? So this is the high and the low of this first day. Then this day they did what? They pieced through the high. So this gave us a trend day. And remember, our strategy is trend continuation. In other words, we need a trend and then we want to follow that trend the following day. So criteria number 2 says we need a pullback to what? To key areas. If you look at this one, it closed as a trend day. Then the following day we need a pullback. The pullback can start from this day or it can be the following day, right? So we need this pullback to come to key areas. If you look here, we have the high of this day, which is the key area that was revisited this day here. Remember, when we get a trend day, the opportunity is the next day. The opportunity is the next day. So we need a pullback to key areas. This time around they came to this high. They can come to the closing price of the previous day. We'll see that when we go to the charts, right? And all the indicators, I have them. You can send me an email and I'll send them to you free, right? So this is a key area because it's the high of this day. And then again, this day again, what did they give us? They gave us a trend day. I want everybody to understand this in the simplest manner. This again is what? This again is a trend day, right? Because they violated this high. So we got the opportunity this day, but I'm not talking about it now because I will address it in a minute, right? So this day again, they gave us what? A trend day. So we look for the opportunity the following day. Criteria number 2 is we need them to come to key areas. This time around, if you look, they used this as a key area. You see, this was where they got support. You see, they got support here. So the following day, they might come to this support. So when I talk about key areas, I'm talking about yesterday's high, yesterday's low, yesterday's close, and support and resistance, right? So any of these areas can be the key area area, they come to the following day. Why? Because obviously people are chasing moves. So this day there are people who bought here. The following day they need to come and stop hunt them, which is why when prices go up in an uptrend, they do something like this. You see, so we are looking simply to get our opportunities somewhere here. You'll see everything will become clearer in a minute, right? We are looking for our opportunities somewhere here. So this is the pullback. This is the trend. This is the trend. This is the pullback that we are looking for. But it must be to key areas, because obviously there are people who are buying all the way up. So the following day, the reason they pull back is they are coming to stop hunt all these guys, and then they will trend again, and then again they will give a pullback. You see, that's all we are looking for. Now let's go to the next criterion. All right, now we have addressed the pullback to key areas. Sorry for that. We have addressed the pullback to key areas. We are going to criterion number 3, which is the pattern. We need to get a pattern. What do I mean by this? Well, when we come back to the example we had initially, they gave a trend day, as we can all see. The following day they pulled back, right? They gave what? A trend day. The following day they pulled back, right? So now we need a pattern, because we're not gonna enter down here. We need to position ourselves somewhere here. We need to position ourselves somewhere here. So we are expecting a pattern somewhere here. This could be any form of a pattern. It could be a triangle. It could be a head and shoulder. It could be a rectangle. But what we are looking for is a pattern where at the key area, you see. So if there's a path, they keep going down and down and down, we're gonna be looking at this next key area, and then this next key area if they keep going down. But once they violate the law of the previous day, that opportunity is gone. We just call it a day. I hope you understand this. Very, very significant. Now I believe we all understand what a pattern is, and you can just do a simple Google search for chart patterns. Any pattern you find, those are the patterns we need. And those who have the playbook, I have given you all the patterns you'll ever need. And for those who need it, it's in the description below. It has a number of strategies that I use, and it's the playbook that I trade by. It has a lifetime update, and again, I'm gonna upload the latest update now because I have a very good strategy there for long-term traders. I will upload it, right? So with that said, criteria number 4, we are looking for what? Once we get a pattern, we need a breakout in the direction of the trend. After that, we need a retest back into the trend. Then we need an engulfing candle in direction of the trend. So what do I mean by that? Say for instance, we got this pattern, right? We're not just gonna execute. We want to see a breakout, and then we need to see a retest back into the pattern. After that, we need a super big engulfing candle. By the way, this candle must be a big candle, because we are actually expecting them to shift the zones immediately, right? So this is just the pattern. They break out of it, they retest it, and they give a huge engulfing candle. Remember, not just any candle, it must be an engulfing candle. That's where we execute on the close of this candle. Usually I use, for currencies, I'll use a 5-minute chart or a 15-minute chart. It depends on which one will show the pattern in a better way. All right, so when we execute, we put our stops down here and we take it all the way back up. What I suggested is, if you want to take a lot size, divide it by 2 and take 2 positions. And for the first position, your TP will be the high of the previous day. Why? Simply because if they gave us a trend day, they pull back and they are going up. If this is a trend, obviously it has to violate this level first, or else it will not be a trend. So when you put your first TP here, you are saying even if they come here and start playing and reversing, you have already logged something. However, most of the days they will close very far from the high of the previous day. That's why one position you can hold till late in the evening. That's when you can close it towards the close of the day. And besides, when prices are going towards their close, they are just gonna be ranging. They are not gonna come back anymore, right? However, as it progresses upward, you must trail the last position at least to here. Because we have 3 major trends. We have 3 different types of trends. We have a major, an intermediate, and a minor. You have to understand that yes, we are looking for this move, but in it there's gonna be another trend. So immediately when it breaks here, you can trail to the latest pullback in case they go up and then they come and close you. That means you have locked all your positions here. But if they keep going up, then you are still in for more profits. All right, so I believe this is as clear as it sounds. Just to make another example, this again becomes a TD TD. Why? Because they violated this high, you see, which is this day's high, right? So the following day they can do something like this. They can pull back, and then let's say for instance they came to this level here, which is support, right? This move was supported here and it kept going up, right? Remember I said when we talk about key areas, we are talking about yesterday's high, we are talking about yesterday's low, yesterday's close, or support or resistance. This is not so hard to actually track. It's very easy. So we are expecting them here to at least give us a pattern. Sometimes it could be a rectangle, you see, it could be a rectangle. Let's just say, okay, let's just put any pattern. It could be a triangle, a rectangle, any pattern. All right, so what are we going to be looking for? We're going to be looking for them to break and then pull back, and then here we want to see a super big engulfment candle, and that's the one we execute on. You can put your stops here, and we are taking it all the way up. You see, we are taking it all the way up. The first TP is going to be this high, because obviously if it's going up, this is the first area it has to violate. You see, TP1 here, and then TP2 you can hold to the close, but remember to trail once the move has broken out of TP1, which is the high of the previous day, right? And this can keep going and going and going and going and going. All right, it can keep going and giving the same thing. So if we position ourselves like this, we can have multiple days of winning. You see, multiple days of winning. But we need to know that at some point this trend will fade and reverse, because we have different kind of trends. So I believe this is as clear as it sounds. I try to make this criteria as easy as possible. So just for a recap, we need a trend, right, which is shown by a trend day, a day that violates the previous day's high or low. Number 2, we need a pullback to key areas. Number 3, we need a chart pattern. Number 4, we need a breakout plus retest plus engulfment. You see, it's a breakout of the pattern, retest of the pattern, and an engulfment in the direction of the trend, and then that's where we enter. All right, you see, today what happened? Yesterday we got a beautiful TD from this asset, right? Beautiful one. Why? Because they violated this low. So what do we look for? Rule number 1, we said we need a TD. Rule number 2, we said we need what? A pullback. Rule number 3, we said we need what? A pattern. This pullback must come to key areas, right? And then we need a pattern, right? And then after that we need what? BO plus retest plus engulf, right? And then that's where we execute. This is all we need. So let's look at it in a very simplified way. So this is the TD we got. They violated this low here, right? So we can all see that. Now let's look at what we got today. First of all, if we identify these levels here, you can see that they pull back to what? To key areas. You see, this is where they got support before collapsing down, right? And then after they gave a pullback to key areas, and then after that, what did they give? They gave a beautiful rectangle. This is today, and I just posted a similar video to this one the day before yesterday. Everything similar, you see. So what did they do? They broke out of it. You see, they broke out of it. They retested it, and that's when they collapse. You see, not with any candle, but with a super big one. You see, this is an engulfing candle. So this thing, some people will say this is hard, but honestly this is not really hard. The same thing we talked about. They gave a trend day, right? They gave a pullback, criteria 2. It must come to what? To key areas. We have that. They give a pattern. We have a rectangle here. They break out of it. Yes, they break out. They go back, retest. They break out with a super big engulfing candle. This was just a simple giveaway all the way back to the low, 120 points. And if we were to bring the 21st EMA like this, you'll see, you see, this move is already inside the EMA. They come and bounce on it. Bouncing on it doesn't mean they necessarily have to touch it. No, this is a bounce on it. They can piece through it, they can just test it, or they can just come close to it. Remember, these are prices and this is how they move. So a simple execution. These moves are super quick, right? Let's look at another one quite quick here. All right, to identify trend days, we all know that we use what? The hourly time frame, because it shows the days. Very simple. So when you look here, we got a TD. Why? Because it violated this low, you see, and we have multiple 1 hour candles closing and breakout. So this is a TD. We understand that. Okay, now let's switch to a smaller time frame. I said I use a 5 or 15 minutes depending on which one shows me the pattern. Simple. TD, they violated the low here. This area was violated. It's a TD, right? So they pull back, let's look at the key areas we have. This is a key area, right? So we have another key area here. They came and bounced here, you see? So our job is to see what are they doing when they come to this key area. And in reality, this is supposed to be a box, not just a line. If we take this last candle, we can see, we can make it a box, because some people expect them to come straight and touch this line. They are not always gonna do that. It's just important to know that, right? It's important to know the most important things and keep that in mind. So they did come to a key area. Even if we say they came to this one, it's still fair. Some things we must make our own judgment, right? But they did come, but that's not important. The most important thing is, what do they do when they come to the key areas? And that's what actually gives us the information we need. They come here, what do? They actually give a beautiful triangle. And the most important thing is not how you draw these patterns, right? The most important thing is not putting them straight here, no. The way you draw the patterns is not important. You see, it's not even important, right? And then what do you see? We bring in the 21st EMA just for confirmation's sake. You see, they piece through with a pin, they piece through again, they break out here. You see, they broke out again here. This one, yes, we can just say it was something like news, right? But look at this. They came back, pieced through, retested the 21st EMA, and that's when they collapsed. Look at the size of the candle they give us after the retest. An engulfing candle. That's all we need for the day. We execute. You see, stops can be above this candle, but look, 130 points free. That's where you took the first TP. And if you are holding till now, because now it's going towards the close, this is actually 200 points, because now it's late. You can just close it, because at the end of the day, they're just gonna consolidate and give nothing else. You can just close it. And as I said, I have a long-term simple strategy for those who maybe are busy most of the time, those who do not want to take things every day. It's gonna be on the playbook. I have been updating it. However, I was still away. I had to take time, free time for myself as well. So I will upload it when it's done again. But for those who need the playbook, as it's a lifetime update, it's in the description below. And for those who have it, you're gonna get this updated version for free. I'll tell you when I upload it, and you can just download it, right? Because it's a lifetime update, and I'm still gonna update it as we go, because this journey is always about learning, and I have like a lot of things I am actually working on, you see. But this is the most easiest executions ever, the most simplest executions ever. So if we can just look at this one again, look at this one. Yesterday we got a TD. I'm not gonna talk about past days. We got a TD here. Why? Because they violated this level and they went all the way down. This one moves in Asia, so most of the time the pullback is gonna start happening on the same day. So they come here in the beginning of the day. That's when they give a pattern, they break out of it, they pull back, and they collapse. They collapse back to where? To the closing price. These are easy executions. If you go to a smaller time frame, these are the most simplest executions ever. And because this one moves in Asia, most of the time you're gonna see that the pullback happens from the very same day. And right in Asia, that's when they give the opportunity. That's what will be happening on this asset most of the days. Why? Simply because it moves in Asia. That's why you can see this thing has been going up a number of days, but the pullback happens mostly on the day itself, and then the following day early in the morning, that's when they give the opportunity. Happens on the day itself, early in the morning they give the opportunity. So it's just about also knowing what time this thing moves and gives the opportunity, and that's where you are waiting for the breakout, retest, and engulfment. But this is so easy, very easy.